Investors' interest is soaring in highly capitalized Nigerian stocks, and the positive trend persisted for the third consecutive week in the Nigerian stock market, with investors showing interest in highly capitalized stocks. The analysis of the market last week showed that gains on robust market stocks propelled the Nigerian Exchange Limited All-Share Index to a 0.4% rise, seeing a week-on-week increase to close at 71,112.99 points from 70,849.38 points in the previous week. In the same vein, another stock market gauge, the NGX market capitalization, added over 182 billion naira to close at 39.107 trillion naira from 38.925 trillion naira. Consequently, the month-to-date and year-to-date returns rose to plus 0.4% and plus 38.8%. So this morning, Oladipo Ajayi, head fixed income and FX, Chapel Hill Denham Securities, joins me to further expatiate on this. It's nice to have you around, Oladipo.
Good morning. Thanks for having me on.
Now, some weeks or let's say some months back, we were weary about a few losses here and there and the seeming waning interest of investors in the Nigerian bourse due to the state of the Nigerian economy. But now we are seeing renewed interests, of course, for investors in capitalized stocks. So what is actually refueling this rising tilt towards the Nigerian markets?
Well, I think we need to first look at the fact that most of these companies actually posted a great results in their Q3 results. And another thing also we need to also notice that although some of them suffer exchange rate loss, and we expect that for most manufacturing companies in Nigeria. But when you look at their top line, it shows that they have exceptional performance, or they're able to actually weather the storm, irrespective of what is happening in the economy. And these are some of the reasons why people are actually showing interest in some of these names. When you look at MTN, for example, at the time, MTN was trading about 284 before the information about the likely fine that will be meted on the company. And market reacted to that. We saw we saw further that the stocks actually traded around 235 levels. And since then, a lot of people have been seeing the value in the stock. I've been seeing people showing interest in the stock, and that's one of the reasons why we saw that activity on MTN last week. And also, when you look at Seplat actually posted a very extraordinary performance, and it was on the back of that we saw that huge interest in Seplat. And when you look at a company like Seplat that is into oil and gas, and is in a situation whereby oil prices actually still roaring aggressively, and it means that it's good for such business. And that's one of the another reason why a lot of people are actually pitching their tents with Seplat. And overall, high capitalized stock more of interest to a lot of people because they felt that they have the capacity to actually weather the storm. People also felt that they have potential to actually improve in value. When you look at names like Dangote Cement and the likes, so a lot of people are more comfortable with them because they feel they are more like portfolio stabilizers. And that's one of the reasons why we saw that level of activity on those names last week.
Well, I'm also aware that highly capitalized stocks are companies with a long track record of profitability and financial stability, just as you have equally mentioned. But then when you consider, Oladipo, the make of the total Nigerian stock exchange, when you look at the entire market, regardless of downturns, momentary topsy-turvies and all whatnot, does it have more of companies like this that are less volatile and with lower risk investments and have the ability to have higher yields for investors?
When you look at the universe of companies listed on the exchange, we don't have much highly capitalized stocks like this. You can count them with your fingers, but majorly most stocks, you find areas of stock on the exchange. You find penny stock, you find value stock, You also find growth stocks on the exchange. So it depends on the risk capacity of the investor that determines what level of investment you actually push your fund into. And a lot of people are actually more comfortable with something that already have a great track record of performance. And that's just like what you mentioned. And that was the reason why we saw interest in some of these names last week. At this particular point in time, a time where you are waiting for clarity from the monetary policy side. It's a more of time where a lot of people want to stay from actually gambling in the market and taking high risk. So in such time, you want to go with an instrument that has a track record of performance. And I'm actually not surprised that a lot of people are actually pushing their fund into these names.
Now, of course, the positive trend persisted for the third consecutive week in the Nigerian stock markets, most especially for the readings that we've seen so far. Now, are there any major signs that this might continue for a longer period and the year ending on a high? Because we've talked about these stocks' resilience. You've talked about the NPC trajectory in terms of the decisions being made and market reactions when it comes to stock activities on the market. So when you put all these together, is it showing a trend or a signal that it would be positive all through and we probably might have a bullish run looking at the end of this year?
Yeah, for me, I think a time will come during the year where people have to take profits on their investments. Most time when you look at precedents, December is more of a time that people want to take profits. People have obligations to meet, school fees, people want to actually spend for the unified period. And as a result of that, you tend to see some investors actually coming to the market to sell down some of their positions. And you expect that to actually have impact on the market. And also, when you look at the monetary policy guys as well, a lot of people are waiting for what would have been the decision, assuming the meeting actually had today. That decision would, to a great extent, determine how much market would have gone. As to speak, Treasury bill is more like a substitute to the NGS market as we speak currently. You have a one-year instrument that can give you a return of about 20% effective yield. And I doubt there's any stock on the exchange that can give you that level of dividend yield as we speak. So we will not be surprised that we'll start seeing a lot of people migrating their funds from the NGX markets to more like treasury bills, which more like a short-term debt market to actually take advantage of the yield in that segment of the market. So for us, we are not expecting more like aggressive bullish run throughout the year. Although we'll see a situation whereby people come to actually cherry pick the market, but we feel that it will be more people trying to take profit than people aggressively buying.
Oladipo, from the reports that we got, gains from a few prominent stocks propelled the Nigerian Exchange Limited All-Share Index to a 0.4% week-on-week increase. And of course, we saw the margin between 70,849.38 rising to about 71,112.99 points. And some people feel that the margin in between is weak. Some people have tagged this as modest. So what do you think about the growth rates? Would you say that it is appreciable, something that we can consider and look forward to, or you say that it's just, a flash in the pan?
I would say it's a flash in the pan because I mentioned earlier that you also said that the growth that we saw can be traceable to the fact that some selected big names actually increased in valuation over the week. But it's not something that you expect to see to actually continue this week. We think that some of these names, a lot of people want to start taking profits based on the current price in the market, and we feel that that will actually pause that aggressive upside potential that we have seen on the NGX. So we feel, I believe that this week, I don't think we'll see huge improvements than what we saw last week. And I don't expect to, I will even be surprised if the market actually gained this week, because knowing fully well that a lot of people are already prepared to actually be careful this week, and knowing fully well that there was supposed to be MPC making. So if you look at how market has started already, the market started very quiet, not much activity we're seeing in the market. And the only catalyst that could actually push market for the year will be if at the end of the day we're able to resolve the FX crisis, and we start seeing influx of foreign investors into our market. As we speak, over 90% of the current holding in the market is on the part of the local investors. So it means that less than 10% is held by foreign investors. So if we market is open to foreign investors, they can easily bring in the FX and take out the FX. I think at that point in time, we can still see more like aggressive upside movement in the market. But leaving that out of the equation, I don't think we'll see anything extraordinary.
So invariably, if we are to look at it from another side, looking at the stock market gauge from another angle, now the NGX market capitalization added over 182 billion naira to close at 39.107 trillion naira from 38.925 trillion naira. So from what you're saying, can I deduce that you are not too optimistic about the coming weeks and the possibility of investors buying in terms of their interest and their shares in this stock would wane? Is that what you are trying to say?
Yeah, you actually get me right. What I'm saying is that the interest will wane, and I mentioned that one of the reasons is that there's now alternative investment like treasury bills already available in the market, and names that we saw activity on last week, they've been very quiet for a long time. MTN has been very quiet, Seplet has been very quiet, LT Africa has been very quiet for a long time. But for the results of Seplat, it actually reignites interest in Seplat last week, and the long-term low level of MTN also reignites interest in MTN. So I don't think it's something that can be replicated this week, and that's one of the reasons why I felt that interest will actually win for the week.
And we need to take into consideration the issue of the inflation rate, which is about 27% thereabouts. And financial analysts are also cautioning investors in that light that they should be careful when it comes to stocks investment. So would you also advise the same for investors looking at the uptake in inflation rates?
I think in a situation whereby you have an uptick in inflation like ours, I think one of the markets that can help compensate you is the equity market. So it's just for you to be able to identify the industries that you feel that can actually compensate you for the huge inflation depleting your income. So I agree that to a great extent, the equity market should be, with anybody, that equity market should be a place where you can actually play in a time where inflation rate is actually inching up. Because most companies that actually operate on the exchange, they are still able to actually pass through some of those costs to the final consumer. And if you're able to pass costs, it means that it will improve your return. At the end of the day, the dividend that will accrue to investors will also improve as well. So I feel that equity market gives opportunity. If you look at this year, equity market has done 38.8%, and I think aside the Eurobond market that has done close to about 80% when you have to actually consider the devaluation of Naira, I think the second in line would have been the equity market, and 38.8%. When you compare it with the inflation movement within this year, I think equity market has done better, and you would have gotten a better real return when you compare equity market with the level of inflation figure that we have seen this year.
Well, in all of this, we are seeing that everybody's actually focusing now on the expected third quarter gross domestic product figures, as well as the outcome of the NPC meeting, of course, of the Central Bank of Nigeria. Of course, we are aware that that meeting has been postponed and the later date is being tinkered with. But in the interim, what are your expectations pending the time a meeting will be held and a decision will be handed down? What are the things that we should be expecting? Because we are aware that investors will be closely monitoring the outcome of the meeting to know in what direction the fixed income market would head.
I think so. A great extent, what we'll see more of a quiet market now. The market is thrown into a situation of indecisions where a lot of people are waiting on the monetary policy guys to actually get the clarity of how to move. And when you find yourself in a situation where expectations like this are not met just immediately, you tend to see a lot of people staying on the sideline, and that's one of the reasons why I said that I don't expect any exceptional performance of the market for this week because a lot of people are already staying on the sideline because the miss is not going to hold again as actually expected. So for me overall, I think the market will be quiet for some time until when we see another bust up that can actually push market up.
And it's quite also understandable looking at the fact that Nigeria is still faced with weak macro factors such as when you look at the economic conditions, you look at the low GDP growth rate, high employment rate, inflation rate hike, as we talked about earlier, and the declining consumer spending. So if we tie all this together, and of course, what people are saying in terms of they wanting to just sit back and monitor, and your readings, should we say that these issues that we are looking at can be considered as headwinds for corporate earnings and profits in the coming weeks? Are they going to be major issues when it comes to earnings for investors and markets?
Of course. These are some of the factors that you actually put in the model to actually be able to actually identify whether the situation is actually a very good time for anyone to actually invest. Some of these things, they are lingering things that a lot of people have been waiting on the government to actually resolve. The FS crisis is still very much there, and a lot of people are actually part of that. There could be a time where the government can decide, or the central bank can decide to further devalue the currency beyond the 700 something level that where we are currently trading. And what that simply means for most of these businesses that there will be additional FX loss that will be taken in, and that this will not be so good for the business environment. We've seen this year when you look at the manufacturing sectors. Most companies actually operating in that segment of market have taken over 500 billion worth of FX loss this year, and it won't be a good thing for anyone to actually want to follow that line again. So some of these things are things that we feel markets are waiting for clarity around. You're waiting for the FPC to actually mention what is the next line of action, what are they doing. We'll be hearing that the central bank is working on the FX framework, and a lot of people want to have an inkling into what is in that framework, so as to be able to know how to actually position around it. So I think with this postponement of this MPC meeting, it will further keep market mute for some time, as a lot of investment will actually continue to stay on the sideline.
For the issue of FX framework that everybody is anticipating, what would you expect to be detailed in that particular document? Because we're looking at forex scarcity, we're looking at the disparity between the naira and the dollar, we're looking at also the huge disparity between the parallel market and the official market. So when it comes to having a framework for FX for the country, what are the major things that you would want to have being imputed and implemented?
I think my first thing will be more like a digitalized FX market, where it will be very easy for the central bank to actually monitor that market appropriately. And I remember in 2017 when such statement was made about releasing the FX framework, it was at that particular point in time that the central bank introduced the Ajayi window. We also saw the reintroduction of the BDC guys into the FX market. And within a short time, we saw improvement in the FX market. So markets actually converged at 360. As at that particular point in time, the parallel market was north of 500, and the official market was trading around 240 there about at that particular point in time. So I think a lot of things expected of this FX framework. We need to actually create a lasting market. We don't always want to come back to this table to continue to actually tweak and actually release new framework. We want a situation where the central bank would have considered all the problem actually facing the market. Also, the central bank should have consulted all stakeholders in the market, BDC, users, financial institutions, and everybody that are actually stakeholders in the market to actually be able to actually give the right framework that will actually work for all stakeholders in the market. So I think this is actually very, very essential in such a time like this because we need to actually find a way to actually resolve the aggressive FX market so as to actually further protect people operating in the manufacturing industry.
Okay, just to wrap things up, Oladipo, in just about a minute, I'd like to just find out from you, what are your predictions as regards the Monetary Policy Committee, whenever it is they will be holding? What do you think their focus would be on? And when you talk about, and of course, the issue of inflation that is on an ascendancy, what are your predictions as regards that?
I think my first take is that I expect them to talk aggressively on the current FX issue. I expect them to actually brainstorm on the way to actually return normalcy fully back to the market. Of course, we've seen the central bank actually doing that line already, trying to actually pay down on some of those matured FX forward. And aside that also, I expect them to actually talk about the inflationary pressure. And I think on the back of that, we will likely see another rate hike. I think that we'll see minimum 100 basis point rate hike.
Okay. Oladipo Ajayi, Head Fixed Income and FX, Chapel Hill, Denham Securities. Thank you so much for your time.
You're most welcome.